Joining me now, the Australian newspaper's Washington correspondent, Adam Creighton. Adam, thanks for joining me. Look, do you think the US will go into a recession, and what about Australia?
Well, certainly there's been lots of doom and gloom over here, Sharri, that's for sure. I mean, the cash rate, the interest rate here, if you like, has gone from basically 0 to 4.75% in about 12 months. That's a very rapid increase. So, of course, lots of economists, just like back home, have been saying that the US is going to fall into recession. But it has to be said, the economy has proved remarkably resilient so far. We've still got a jobless rate here in the US of 3.4%, which is the lowest, I think, since 1969. And consumer spending, just like back home, has also been very strong. So I think the economy has definitely surprised on the upside. There was a survey here of the top economists in the US that came out just yesterday, and about 60% of them, 60% of I think 48 economists think that there's more than a 50% chance of a recession in the US in the next 12 months. Now, that's not as bad as what they forecast a few months ago. So I think there's probably a slight move toward optimism. And what can we learn about that for Australia? Well, Australia seems to be about 6 to 9 months behind the US, and so I suppose you'd probably say good news that Australia might not go into recession, just as the Treasurer has said. But then again, Australia has a different financial structure. Many more home buyers have a variable rate interest mortgages. So that means, of course, when the cash rate goes up, that it affects them. That affects their disposable income immediately.
And those who are unfixed, unfixed mortgages will be coming off those in the next few months. Many people will. Now, Adam, you would have heard just then that Robert Herjavec said that he thinks the central bank in the United States has been too aggressive raising rates. What's your view on that? And again, the RBA Governor Philip Lowe here.
Well, look, I mean, I think, I'd probably slightly agree with him. I mean, central banks have this one theory that they can control the rate of inflation with their short-term interest rate. And everyone tends to think that that is true, but there's actually not much evidence for it. It's a theory. It's not, it's not an empirical fact. And so the US Federal Reserve is looking here at inflation of 6.4% for the 12 months to January. That's, of course, more than 3 times what their target is. And so they're compelled, really, to keep raising interest rates. The cash rate target here right now is 4.75%, so quite a bit more than Australia. And it's forecast to go to 5.25 in the next 6 months. So that's a fairly hefty cash rate.
Yes.
Now, if the rate of inflation does not keep falling, then they're probably going to keep lifting. And at some point, that almost has to cause a recession. I mean, if you look at the 16 or so times since the Second World War when the Federal Reserve has tried to kill inflation, with increased interest rates, that normally leads to a recession in almost every case.